What is up, YouTube? Welcome back to Stocks by the Numbers, and I just wanted to make another quick video here talking about DraftKings. Obviously, this is a company that a lot of people are familiar with. I'm sure you've seen their commercials. This is, daily, weekly sports betting, and they have every sport underneath the sun, and everyone can make an account and make a couple of bucks here. But at the end of the day, we are going to be looking at the numbers. Now, a couple of things stand out. First of all, the beta, which we spoke about in my first video, where I laid out that the beta is the volatility of a stock in relation to the volatility of the overall market. So as you see today, markets are pulling back a little bit. DraftKings down 8%. Why? Because it has a very high beta, 1.88. So a little more volatile than some of the other stocks out there. But I just wanted to look at this company because, as you can see, we're seeing some hefty volume. 21 million shares already traded, average volume 26 million, so it's probably going to go up probably north of 28 to 30 million shares by the end of the day. But it is hitting new lows here, basically, and you're seeing a huge negative on the EPS and a market cap right here of about $4.5 billion. Now, the real question is it going to keep dropping, or are we going to reverse here? Now, first of all, here on the EPS side, you can see we had some big misses back in early 2021. And, obviously the company's been doing a little bit better. Annually, revenues starting out at $226 million back in 2018, up to $1.3 billion, right? So $1 billion more revenue, 6 times as much as they were taking in. But look at the earnings. Right, so this company brought in $1.3 billion last year, but they lost $1.5 billion. Now, anytime you have a company that's, spending $1 to make $1, you're not going to see much growth. Or in DraftKings' case, after some quarters, they were spending $1.50, even $2 to make $1. But, quarterly revenues and annually, revenues keep rising. But the real question is, are we going to bounce from this level, or are we going to keep dropping? Now, back when DraftKings was up at, $22, $24 a share, back in early March around this earnings quarter, I personally said that the company was spending more than they're taking in, and this is a $10 stock. That was just my opinion. I'm sure other people own shares and thought that the stock would go to 50. I totally understand where you're coming from. I'm not knocking you. But at the end of the day, again, like we always say, the revenue that the company brings in, the amount of profit that the company sees off the revenue, is going to dictate an inflated market cap, which is going to be reflected in a higher stock price. Now, here at 1041, again, we're seeing like a double bottom here, technically, from a technical standpoint. Last couple of earnings reports, you could see back middle of February, company had a decent quarter, showing a beat on the top and bottom lines there. This is the most recent quarter again. Not too bad, but at the end of the day, not too good. So this company could really be viewed in two different ways. So on one hand, you can say that, well, customer acquisition is growing, they're increasing new accounts made, there's more daily active users, and, more bets are being placed, so they're making more money. Okay, understandable. But also you have a company that's making, $1.3 billion, and they're sitting here at $4.5 billion. So from a market cap standpoint, you could say it is potentially overvalued. However, these stocks trade based on future earnings. Now, if we pull back, they IPO'd back in 2019. So if we just pull up a full chart here, you can see they came out at around $10 a share. And now they're sitting here at $10 a share. So it went from 10 up to, I don't even know here. I think it hit 70 at one point. But at the end of the day, we pulled back to IPO price. And, to be honest, I'm always bashing these new companies, these new age tech companies. I do always feel that a lot of them are overvalued. If you watch my recent Palantir video, I spoke about Palantir being overvalued and, in my opinion, probably going to hit new lows. But sitting here at DraftKings, sitting here at $10 a share, I actually think that this company is a buy. We're hitting new lows here. We're back to IPO prices, and now we're looking at a $4.5 billion market cap, right? So if the company sold everything they have, everything under their name, boom, they're worth $4.5 billion according to share price and the number of shares outstanding and all that. But they're bringing in roughly $1.5 billion in revenue. So you're trading 3 times revenue, which isn't that expensive. It's not a high multiple. But again, the fact that they're spending so much to make a few more dollars kind of raises a red flag to me. So worst case scenario, in my opinion, you might see a pullback maybe to like $8.50, $9. But even here at this level, I'm a buyer. I'm a buyer here on DraftKings, and we're looking, this is the daily chart here on stock charts. And you can see here, this blue line is the 50-day moving average. And you can see that this company has been struggling to get above this moving average. And I also plugged in the 20-day moving average. This is the simple moving average, by the way. And you can see there's some resistance here. Resistance breaks above for a little bit. Resistance, small break, resistance, resistance. So what I'm seeing is in the short term, they're beating the stock up. If we look up here at the RSI, it's now below 30. I know a lot of people might say that means it's oversold, but I mean, I've seen lower. I've seen stocks with RSIs of 12 and whatnot. So, you know, this stock could easily pull back to $9. We have a MACD here that looks like it's pulling back and selling off. So the company could continue to bleed if the markets, you know, stay red and really force it to pull back. But at the end of the day, long term, you know, a lot of analysts recently cut their price targets down from like the low 30s to like the low 20s. But I'm seeing, you know, an average price of like $24 a share for this company. And based on the multiples of revenue to market cap, again, I know I always bash a lot of these overvalued companies, but I do think DraftKings is going to hit some bottom here soon, and we are going to see a rebound. I think we're going to get back above these moving averages and even propel higher back up to this $20 price range here. So, you know, kind of a mixed bag with DraftKings. I know even just saying it, if I was sitting here watching this video, I would, you know, come to the conclusion that, okay, it can either go up or down, which we know can happen, of course, any day with any stock. But I do feel, regardless of how much money that they're spending on advertising to bring in, you know, some new faces and some new accounts to increase the size of their platform, I know that they're signing deals all over the place with all these casinos and whatnot to get their sports book going and to be the sponsor of this and that. So I have to say, in my opinion, I do feel that this is going to be the bottom. You know, they can potentially pull this back to a little below 10. Again, you might see 9, 9.5. But we're back at IPO price. And unlike Palantir, this is a company that, again, is trading about 3 times revenue to market cap. Palantir was like 12 or 14 times revenue to market cap. And they're not net positive either. But, again, stocks trade and are valued based on future earnings and future growth. And the fact that this stock got beat up so much, has pulled back to IPO price, and you still have analysts maintaining, you know, over a $20 price target, I have to be honest and I have to agree. Because if we double that, we're looking at a $20 stock, obviously, if the stock doubles. And then we're looking at a market cap of about $9 billion, which is, 6 times total revenue. So that's still not that bad. But I'm sure investors are looking for continued customer acquisition, new accounts, continued revenue growth and earnings growth. And like I said, if they can find that sweet spot, that sweet, beautiful formula to where they're bringing in more than they're spending and you're seeing consistent growth in earnings, then I do think this company is really going to take off. Again, especially if they go net income positive. So long term, I do think we're looking at like a $20 to $30 company inside of, I'd say maybe the next 18 to 24 months. Now, I know a lot of you short-term traders, you don't like hearing that. You want to know what the stock is going to do next week. And, I'm just being 100% honest. I don't want to mislead you. And I don't want you to step in and be bullish when the stock is bearish. Because technically, look at this sell-off. So that, just taking a glance at the chart, that is bearish. That is not bullish. But the point of the video is to know if DraftKings has found the bottom. Now, obviously, markets pulled back here, was selling off. We're down a couple of hundred points on the Dow, down 300 points on the NASDAQ. DraftKings trades on the NASDAQ, so obviously that's not helping. It had a decent day in the morning. As you can see at the open, spiked up to 1170 was the high of today, and now it pulled back to 10.5. So markets have reversed. You have a lot of volatility going on. I'm sure a lot of people are panicking. They're trying to liquidate positions and get cash ready to time the bottom and catch the bounce. But again, in my opinion, I do think this is potentially a little bit of an overreaction. And you might see a market cap pull back to $4. Like I said, you might see low to mid $9 if there's continued selling pressure overall in the market. But as a whole, I do think that DraftKings, even though it's a little bit of a speculative play, this is a market that's growing. I'm sure we all know somebody who, watches basketball games or baseball now, and, they got the DraftKings account and they're laying down bets. You could do lobbies with just, 5, 10 of your friends, and you can each throw up a couple of dollars and have the top 1 or 2 guys take home, the bulk of the payout. And obviously it makes watching the actual events more interesting, because you got a couple of dollars on the line, so you're a little more attached to it. It's a little more exciting. So I understand the thrill behind DraftKings. And even though when it was at 20 and 24, I had puts and the stock would keep rising, and I was pulling my hair out, screaming that this is a $10 stock. And now that we're here at new lows at around $10, I really think it's time to flip the script. I do think that short term it might stay volatile, because you're going to have a lot of people stepping in and buying this dip, and you're going to have a lot of people saying, well, it just hit new lows, so it's going to go even lower. So, the bulls and the bears are battling each other right now to determine really where the stock is going to go. But we're talking long term, again, 12, 18, 24 months. I do believe in the company. I do think it's a growing industry. There's only going to be more and more people who are going to jump on, try to see some excitement, try to make a couple of dollars off some of these contests and whatnot. So long term, I do see a $20 stock. So again, this is Stocks by the Numbers. Thanks for stopping by. I just wanted to make another quick video here on a stock I was watching. Again, DraftKings, DKNG. And again, for you short-term traders, you might run into some volatility. Long-term traders, I do think it's a buy, and I do think it's a growing industry. So moving forward, I want to wish everyone success, and I hope everyone makes a couple of dollars. And again, just like everyone on YouTube says, give me a like on the video, subscribe to the channel if you'd like. Really helps us out. And thanks for stopping by. I hope everyone has a good day.